Hello, traders. Let me turn this down. It is, what day is it? Sunday, April 30th, Sunday evening. It's late here. This is not going to be a long video, but I wanted to quickly review specifically two, if not three, but two new ideas that I'm finding work for me recently that I want to review quickly so that I don't forget how to properly set it up, and then I can continue to backtest on it. These are new ideas. These are not fully backtested ideas, and yeah, as I've said before, I'm certainly not recommending that anybody buy or sell anything. I'm sharing this primarily for my own ability to review, but also just to kind of show people what I'm doing in the market. So again, this is Red Ben. If I didn't mention already, you can reach me on Twitter at RedmanTrader. And if you want to learn more about the algo that I'm using, it is based on the Trading Perform algo, which is built by my coach, Simon. If you want more information about the algo or the trading room where we trade futures, we all watch a stream of Simon's screen and work together to try to be more consistent. You can give Simon a call, an email at trade_the_perform@gmail.com. Okay, so we're going to look at NQ, and I just pulled up, I'm really just looking at this for the first time now from like a back testing point of view. I've been watching these setups for about a week and a half. So these are honestly new ideas. Well, to be completely honest, they're old ideas that I've tweaked, is really what it is. They're old ideas that using signals that I already had on the chart. But since I began trading, since things have been slowing down, I've had to trade the 15 tick. I guess I shouldn't say I have to, but the choices were trade much less. And basically, the algo wasn't setting up as often as I prefer due to the slow pace and the tight range of the equity markets. So the futures markets have just not been doing a whole lot. And the result is, and it's going very slowly. So the easy solution to that is to zoom in at a faster time frame, so I get more bars, more information with less range. The positive of that, as I've mentioned before, is that you get more signals. The negative of that is that you get more noise as well, because you do have more signals. So I've been working really hard to try and find ways to I'm not going to say limit the noise, but at least, I guess it is limiting noise. It's helping me figure out what I can kind of trust and what maybe isn't so trustworthy on these smaller time frames. And to do that, I've been primarily manually back testing the 15 tick, and then below that the 8 tick. Now, that I don't personally take trading decisions off the 8 tick. It's just not enough. It's not enough information. The win rates would plummet, I imagine. I haven't officially back tested a ton of information on it, so I could be wrong about this. But my guess is, 8 ticks is only 2 NQ points, and NQ can get whipped around in 4 to 6 point ranges with not a whole lot of volume, especially if there's any illiquidity whatsoever. So like after hours or information comes out that very fast, high frequency traders have access to, but others don't. Things like that. The 8 tick is going to have a ton of noise, right? And so, like I said, I'm not saying I'm making decisions off of here, but the interesting thing is that the 8 tick still has a lot of the same patterns. It's just that they won't have the win rate as, say, the 24 tick. But the pattern, if it's bullish on the 24 tick, that same exact pattern will be a bullish signal on the 8 tick. It's just that the 24 tick might only show that setup 6 times a day on average and have a 60% win rate. The 8 tick, it'll, like I said, still usually be bullish, but it won't be. It'll show up, maybe 16 times a day with a 45% win rate, right? So it's not necessarily going to give you better results just to trade on a smaller time frame. But the important thing is to see that the pattern, it is still there and it does still work, just not as often, generally, right? So where I'm getting with all this is since I have felt the desire to trade a little bit faster time frame on the 15 tick, whereas for most of last year I was trading the 24 tick and occasionally the 20, but never really smaller than that. I needed to make adjustments, and one place that I found that I'm adjusting a lot is rather than using the algo signals, which are things like the X or the triangles or the dots or the stars or the outlines or the colors in the bars, right? All of those things are just visual representations of things happening on the footprint. That's all it is. It's not voodoo, it's not magic, it's just a way to confirm visually that some condition or multiple conditions exist on the footprint at that very moment. And it once I've learned these patterns, it's easier for me to make decisions just waiting for visual patterns than it is to watch the footprint and have to interpret all that information and then make a decision. So on the 24 tick, for instance, one relatively consistent trade is if you see one of these blue rings that look like this, followed by a triangle, and there's any sense that this might be a support, such as an old level, a 15-minute low, for instance, or a 30-minute low, or previous day's low, or in my case, like a voodoo range level, things like that. If you get those two bars coming one right after the other, just like this, especially when this one is pink, there's a high likelihood that this is going to be held and defended as support, and therefore it's bullish, right? And that's just a phenomenon that happens, and that's why the signal's there to tell me about it, right? On the smaller time frame, the 15 tick, that's if I found that same pattern, which it'll show up relatively often. We'll find it real quick. It will often do the same thing. Here's the inverse: yellow ring followed by red triangle followed by purple bar. This is now likely to get defended. So the difference here is that while it does go lower, right, which makes sense based on that pattern, and it was a identified resistance, right? All of that's the same. The biggest difference is that you don't necessarily know if it's going to be this followed by this, right? Before it goes, whoops, I didn't mean to do that one. In other words, what I don't know is it safe, quote unquote, to put a stop loss behind that bar and expect to rarely get stopped out? Or is it likely that I'm going to get stopped out? Or maybe is it 50-50, right? On the 24 tick, I forget where that went. Well, look, it actually occurred here too. On the 24 tick, this is less likely to happen. The 24 tick high, you in this situation, will likely hold most of the time. The 15 tick has a much lower potential of holding that high, but it's, in other words, a lot of times it does exactly this, where if you put your stop right behind this, it takes out the stop and then it rug pulls, right? That is normal on the 15 tick. So while you might know that this little pattern is bearish, the ideal entry on the 15 tick is not necessarily right there. It's actually right there. Because most of the time when these actually work, you get a trap, what we call a trap back in prior to any big drop. It doesn't mean you can't sell this, but it's a scalp. It's not a big, whereas here, this one, like, it never comes back, right? So if you waited for that trap back in, you just completely missed the boat. So then if you go down to the 8 tick, I don't know if I've loaded enough bars on the 8 tick to see these rings here for this exact same situation. I don't think I did, but if you did and you could see them, oh, here's one. So usually on the 8 tick, this is not what you'd expect, right? Here it did work. You could have put your stop right behind here and survived. That's cool. Unusual, right? On the 8 tick, even more so than the 15 tick. Let me see if I can find another one. Since I know they're loading, they should show up way more often on the 8 tick. Here's one. Lifts, comes back, drop back in, goes higher, right? That's going to be very normal, extremely normal on the 8 tick, extremely normal. It's going to be rarish on the 24 tick. It's going to be commonplace on the 15 tick, and it's going to be like almost always on the 8 tick. So those kind of adjustments are what I'm looking for. Things that I used to do on the 24 tick that like maybe just don't show up anymore is what it looks like when I'm looking at the 15 tick. Like I just never see it, or maybe I see it but like I missed the boat because it didn't print the entire exact sequence I'm used to. But it's perhaps something relatively similar, recognizable, but maybe just not exactly the same as what I normally, when it comes to like where the entry is, it might not set up exactly the same as what I was used to on the 24 tick. So 2 examples of that I'm finding are actually maybe more consistent on the 15 tick if I make this little adjustment than it was with the way I was doing it on the 24 tick. So check this out. Number 1. Now the first one is based on a signal that's produced by me, so I can tell you a little bit more about it. The second one is based on a signal created by my coach, Simon. So I don't have a lot of information about like how to build the signal or exactly what the actual signal means, but I can tell you how I trade it, right? So the first one is, we're going to look at these arrows. See these little horizontal yellow and blue arrows. Now, the color can be a little bit deceiving, but generally, the blue arrows are going to be a bullish signal, and the yellow arrows are going to be a bearish signal. On the 24 tick, it's very simple. If you see an arrow and it's followed by a triangle, it's usually a relatively good scalp just to follow that direction. So I can show you some examples of that, and this particularly works if you are trending. So let's say, like I said, this is going to be a little bit different on the 15 tick, but this is it's an old signal I've talked about before. I'm not going to go deeply into how to build it and stuff, but we'll talk about it a little bit since it is my own. So this one is going the wrong direction. See how it's a positive bar, but yellow for me is a bearish signal. So we're gonna that one's treated just a little bit different. Okay, but this one would be a bearish signal on a bearish closing Renko bar. So this would be an example of one. And if it was bearish here and it's followed by a red triangle like this, what we would expect is that pullbacks can be sold, but that will only work if it's bearish. And in this case, it might just be a straight up stop. So let's see if I can find another. And like I said, what I'm finding is the newer way to do this actually is more consistent than the old way, this way that I was doing it. So let me find another one. See, I don't know how bearish it is here. I don't actually know. We're on Wednesday, the 26th. Okay, so here's a good example. If this looks, so, all right, blue followed by white triangle is generally bullish, right? Blue, no white triangle after it, it's probably not ready yet. That's the simplest way I can put it. Yellow arrow followed by red triangle, it's probably just fine to sell this, particularly on a pullback into that range and get a scalp. Yellow, red triangle, this range can be sold for a scalp lower, right? And like it does work a lot, but it's not 70% accurate or anything. And a lot of times you don't get a full 1-to-1. So now check out this adjustment, right? On the 15 tick, if you did that same thing, does it work? That's the first question. And the answer is, if you know the direction, it does. So if you have a clear direction, so let's say here we say I identify that it's bullish one way or another, right? Like no matter how you did it, let's say that you had a way to identify that you were bullish on like a higher time frame, for instance. So let's go back and find the area where like things start. So this purple in the background generally only shows up when it's bearish. So I'm going to assume that that's bearish. So we're going to start after that, okay? And I'm going to assume that this one I wouldn't have really known if it was bullish or bearish yet. And then once I get this lift and this drop and I don't see any more purple, I'm going to assume it's at least neutral. It's just a kind of simple way without looking at a lot of time frames that I can tell what I might have known at that time. This purple background tells me I know I shouldn't be buying that anyway, right? But after that goes away on a down wave like this, we get a down wave without any purple, I'm going to assume it's neutral, if not bullish, right? So now we're only going to look for blue arrows followed by white triangles, and we're going to ignore the yellow ones more or less. So what we're going to see, unless you had a really wide range, you just ignore them. Now, sometimes they're just not going to show up. So I'm watching for horizontal arrows. So there's a yellow one. We're going to ignore it, right? Because it's going in the wrong direction. Yellow one, we're going to ignore it. It's going the wrong direction as far as I can tell. It is followed by a red triangle. So the 24 tick way of doing things is you just sell that, right? And then you get a little bit of something, and then it kind of chop you up a little bit. Then you get another yellow one, and then a triangle down, and that would work, right? So the old way of doing things, you'd be up, right? My way, like if I wanted to take it one directional and I thought it was bullish here, I would have just didn't flat, right? So I'd still say it's probably bullish. So here's a blue one, but it's not followed by a triangle up. That's some evidence that it might be bearish. And then blue one, not followed by a triangle up, evidence it might be bearish, right? I'm not going to talk about the exact entry quite yet. I'm going to get there in a minute, but we're just going to use that as a general guideline. Blue arrow followed by a white triangle up. Generally, you're going to expect to be bullish. On the 24 tick, I would want to buy this dip, right? So I'd buy this bar and then expect it to go higher, and it does, right? It's just a scalp. Now we got that arrow, and it was not followed by a triangle down, and so that is more confirmation that it's probably bullish, right? So there's a white arrow, but it's on the triangle. That's usually pretty dangerous. Sometimes it works right away, but it's dangerous to sell the retrace generally. And if you're counter trend, it's actually a really good fade. So here it's probably bullish. So blue, but it's on the triangle, right? It's bullish. See that? We're on a higher low. You can probably just buy it. But if it gets beat, it's in big trouble. Yeah. So when these don't work, when these blue arrows on triangles on the same bar as a triangle doesn't produce a break through the resistance, it's in big trouble. And we're going to get into a setup for that in a minute. Okay, blue. We're going to say it's still bullish for the moment. Triangle up. That would be in the old way of doing it. That's just a scalp, and that works, right? So I mean, it's not that it doesn't work. It does. Yellow doesn't get yellow's on an up bar, so we're going to ignore that one. And yellow followed by a triangle down, and we get an extension down. So from this tiny little microscope of Wednesday 426, the old way worked just fine. Right, and that's fine. But what I've found is that it's not quite as consistent on the 15 tick as it is the 24 tick. But here is a way to make it work better. But like I said, what's funny is that this worked better on the 15 tick than it does on the 24 tick. I'm not totally sure why, but here's how this works. So I'm just going to back up to the same basic area. First of all, you don't really need to know the direction, although having a general idea of the direction is a good idea. It will help you, right? So the first idea is, if you have an arrow and it's pointing in the same direction, basically what we want to do is, so there's a blue one and a yellow one here, right? So we can go in either direction. If you mark off that range of that bar, we'll do the blue one first. And then you note the color, blue, right? And what we would then be looking for is a dot that is blue, right? Followed by a triangle. That would be ideal. That's your number one highest odds long, but that combo needs to interact with this zone, which it does, right? It shares range. One of these bars shares range with the arrow. Now, this one was a little bit different because it had a white triangle on it. So if that doesn't work, it's actually a reverse. It's a sell. If this fails, if it doesn't immediately lift, it's actually you take the loss, and then it would be a reverse, right? You go short as soon as wherever your stop it would be, which in this case is underneath the blue. So I'll show you. So the stop here is like maybe like a point, 4 ticks below the low of that where the blue dot is. So let's say 12.8, 96.50. And your entry really shouldn't, unless you were very confident that it was bullish, your entry really should be at the top of the triangle. So when this closes is when the triangle is confirmed. So it could be as high as 12.910, but it's still valid during this pullback. So really, you might have gotten a little bit better of a price if you were willing to leave an order there and see if it fills before it prints 2 more up bars. Once it gets 2 additional up bars, so once this bar is printed, we're going to assume that if you missed it, it's not coming back, and you're going to have to wait for another setup. Or I would have to wait for another setup. But here you can see that 96 to 10, that's not even 15 points of risk, right? And this MAE immediately was 12,932, so that's still 22 and let's say 20 points, even if you were a little late, even if you didn't wait for the pullback, right? You could probably get 24 with the pullback, right? And like I said, that's with the triangle. So this is the ideal way that this sets up is a slight pullback and a lift. Now for the triangle, I said that if this fails, that it's probably a short. The absolute certain short, the strongest certainty short. I shouldn't say certain, but I'm not saying it's certain to work, but it's certainly something I'm willing to take. Is if you look at the triangle, the bar before it should have a little flag on it for me, and if we get the yellow volume VPOC line below this on a bar that's not purple, like this, that is bearish. And at that point, we should really expect, if this fails and you get that instead, it's got to be right away. Triangle up, and then it tries to lift, and it immediately takes this out. It's probably a big drop. You could technically get short here, but the better short's actually when this breaks as a breakdown. And that's only because it's on the blue arrow is on a triangle up. So let's do the next one. This yellow one is also on a triangle bar, right? This triangle is going down. So everything is reversed here, but it's the same trade setup. So this is the signal bar, right? So what do we have to do? We have to mark that off, and we need to see it's got to be a yellow dot. The ideal setup is a yellow dot that looks like this, and it's got to immediately be followed by a red triangle down, just like this. That did not occur, right? That did not occur. Instead, what we got was yellow dot, followed by blue dot, followed by triangle up, and it broke out, right? So that is bullish when it does that. Like I said, because it's on a triangle, because the arrow is on a triangle, when this yellow dot fails to produce a drop immediately, and instead we take that out, this is actually a long on the triangle, and if nothing else, it's a long on this. When this one breaks, that's still a long. It becomes the same trade as we were just talking about, right? Just maybe a little bit later if you want to be a little more confident. You're not going to get as good risk reward, but you could put your stop down here, and it's either going to lift right away or you're going to be wrong. So your stop goes right behind that bar, and you get 10 points, right, most of the time. But that's usually how they'll set up when the arrows with the triangles try to continue and fail. Okay, so let's go to the next one. Oh, and they're only good, as far as I can tell, until you get another signal. So we don't like once I get another blue arrow, if this wouldn't have set up, I don't want to worry about that level anymore. Once I get another one, I'm not going to worry about it. Now this one's going in the opposite direction, so let's just skip those for now, because that setup is better on the higher time frame. So let's just ignore it, right? Because it's going the wrong direction. So we don't have any arrows down here. And okay, here's the next one, right? So it's not on a triangle. There's no triangle on this bar. So we're going to mark it off. And again, it's bearish. So what we really want is a yellow dot followed by a triangle dot. And we want it that combo, yellow arrow, yellow dot, triangle down, to interact with this range, which this does. So that is where you know you're bearish, and I can enter when that bar closes or on a pullback. So this would be an acceptable short. This would be an acceptable short. Any of that, right? All of that would be an acceptable short. But the stop must go behind here. Okay, because it's got to be behind the dot. Remember before? It was behind the dot, right? It's behind the dot. So no matter where you take the entry, I got to put the stop behind the dot because you're going to get a retrace. All of this is buyable, right? I've not gotten the two. So I got triangle, then I got one more bull, right? Or sorry, bear. I would need a second bear bar below that before I knew for sure that this is going without me, right there. So now that I've got a second bear bar, range wise below, this is the first one below the triangle, right? The first range down. This is the second bearish close below the triangle. I know that there's a bearish close here, but that one's in the same range as this one, so I'm not counting that one. I'm saying these are Renko, which is range based. So we have triangle range, right, where we want the trade to set up. I want my entry to be there, right? Anywhere in here is good. Then we have one range beyond, two ranges beyond. Now it's too late to enter, even if it pulls back, right? I would have had to sell this pullback, and once this happens, I'm no longer selling pullbacks. It either needs to go and I'm right, or it doesn't go and I'm wrong. And that one works. And it's just a scalp, right? We're not going to worry about higher time frame. It does help if you know the higher time frame, but okay, here's another one. So that old one, it already set up, it's done. It's blue. We're looking for bull, right? So we need a blue dot followed immediately by a white triangle, preferably. And it needs to be in that range. Blue dot, no triangle. We wait. Blue dot, no triangle. Oh, we got another blue bar. This range moves down. All right, now it needs to activate there. But we need blue dot immediately followed by a white triangle. Blue dot, white triangle. There we go. This confirms I'm bullish. I can buy it there. That'd be aggressive. Or buy any pullback as long as I don't get two more bull bars in a row. That's buyable. That's buyable. All this is buyable. And it appears to stop, right? So this is the first stop. Now, sometimes they're going to stop. They're mostly going to stop when you're fighting a trend. And if you were paying attention, what was happening here, we were getting lower lows and lower highs. And there were aggressive sellers coming in here. And we're underneath that. So it's bearish, right? So that's how you avoid that stop. But I'm not even worrying about that. Obviously, if you didn't have a level here and you see this price action and you didn't think it's bullish, well, yeah, then I shouldn't be buying, right? But if I have no clue, it's technically valid. It's just you're going to get more stops. But it's what I'm finding is that even if you did that, you're not going to get blown away over and over and over again. You might take 2 or 3 in a row, but you probably won't take more than that. I'll show you. So now this one is now finished, right? Because it stopped, and I wonder if this white triangle and this pullback is still okay, because you can see here it does give you a nice little scalp. But for now I'm going to say if it stops, just wait for a different setup. Because there's other ways to get, if you really thought this was the good place to buy, you got your trap back in right here. So a better entry is just this, because it went under the star and trap back into the star. If you really thought, if this was if there was a reason to be selling this, or buying this, then that's where you do it, right? So, but let's not even worry about that. Okay, so here's this one. Blue, right? There were no yellows. Even though it was bearish, there was no... Oh, wait, there's yellow right here. On a triangle. I missed this one. I just didn't see it. So this one's on a triangle. We would need a yellow dot followed by a red triangle. You can see that we haven't gotten that yet, right? There we go. Yellow dot needs to be followed by a red triangle. No red triangle. It's probably just not going to set up, right? Note that we couldn't get... This might have trapped. Usually the yellow line does not overcome the apex here from this one, but this one did just by a hair, I think. Ouch. Just snuck by. Pushed enough volume above it. You don't see that very often. But this one would have fooled me. If I was trying to decide whether or not it's bullish or bearish, that's usually a pretty decent sign that it's ready to get bullish. And then it gave purple bar followed by a divergent bar. I would have expected this to work. So I would not have been looking bear here, but let's see, if I would have gotten a red triangle here, it's good enough to sell. Now a secondary way to get in. This is not as good, but a secondary way to get in. If you get an orange bar followed by a red triangle, okay, like that. And those bars interact with the arrow bar. That can also work. Now here you can see it did not interact with the arrow bar. It didn't quite reach it, right? And it also had some signs that we might need a pullback. The plus and the diamond without the dot are both signs that we probably want to wait for a pullback before we sell. But then here we get the aggressive seller followed by a red triangle on a trap back in of the orange bar. So it snuck behind the orange bar and then went sell again aggressively is what that's saying, and fast. So that on its own, if you thought it was bearish, is another way to get in bearish. Like I said, it's just not this setup. But technically, what I'm finding is orange bar followed by red triangle, as long as it's actually bearish, that's usually okay. You really do have to know that you might get stopped out, and then if it triggers again, you'd have to take it a second time if you went for this lower odds entry of the orange bar, if you're not waiting for the yellow dot. Okay, so anyway, then we have a blue one here, but that one does not get a blue dot or a green bar, which would be the backup entry if it was bullish. So nothing to do. Okay, here's one. So if we weren't sure if it's bullish or bearish, we'd be waiting for a blue dot. It's got to be interacting with that, and then followed by a triangle up. But it's got to be interacting with this, which it does not look like it's going to pull back and do. So this one just lifted, right? This setup just didn't catch that, and that's going to happen. So, did it set up on a smaller time frame? Perhaps. We can try. I got the A tick right here, right? Let's see. Okay, A tick. Let's see if the same exact setup or something similar showed up here. So that's a scalp lower, and that stops out. Right, the sell stops out, and on the smaller time frame, that is going to be probably a better signal. If you knew this was bullish, that sell stopping out on the tiny time frame is usually a pretty good place to look for buys. Okay, blue. Yellow. We need a blue dot. No triangle, nothing to do. Blue. Pull back blue dot. That blue dot's too high. No triangle. It doesn't set up that way. Yellow. Yellow. Triangle down. There we go. That's short. That works. Yeah, so it didn't set up. That's fine. Okay. Yellow. So see how this, on this time frame. Oh, that's a positive bar. We're going to avoid that. Okay, here, this one. Yellow arrow at resistance. It's high on it's above the channel, which is good for bears. Better positioned, better chance of it working. But we need a yellow dot followed by a red triangle, and it needs to interact with this zone. I'm not going to count this. That did not reach it, in my opinion. It really needs to interact with that yellow. It needs to be in this range. And that is below it. And plus it's bullish. So I really wouldn't want to test it anyway. Okay, now this one. Right? There. That is, I'd have to say that this is a sell. Because we got yellow dot clearly in the range of this bar with the arrow. And it was followed by a red triangle. So unless I had a reason to think that we were trading into support or something, I would say that's a sell. And that does get you your 10 points. Did you get a blue one? No. Yellow again. Do we get a yellow dot? Or maybe an orange bar? Oh, this yellow dot's too low. Blue. Let's see if blue gives us a blue dot. See, this one did interact, but it's not orange, and it doesn't have yellow dot. It was followed by a triangle, so it might work, but I don't... Yeah, see, it gets stuck here. So here's the alternative entry, I bet, on the bull, as long as that's followed by a triangle. So if you thought it was bullish and you get the blue arrow and immediately across from it's a green bar, that's exactly the inverse of the orange bar across from the yellow arrow. So when that's followed by a triangle and and I think it's bullish, that's probably a buy. Now here you have resistance here, so it might be pretty dangerous. Yeah, you just trades the top resistance and reverses. I think it's okay for 10 points. This one, once again, tries to set up. You get the triangle, but no yellow dot and not an orange bar. So just not consistent enough in my research. This one actually did set up, but I mean it did drop, but it didn't set up. Okay, blue. Notice it's not immediately followed by a triangle. So in the higher time frame, I would have dismissed it as like not a good place to look for a buy. Here, if I can get it to set up down here and then give me a triangle up, it's usually good. Now here I've got a green outline bar. And that is probably the weakest option. It basically is it's another one of my own setups. Conditions. And it's basically saying that there's sellers at the lows. It's better when there's another one over here and another one over here. See how they're lining up like that? So sellers repeatedly are trying to break down the lows and they're failing. And so it's not necessarily a buy immediately on its own. But when I've got this level already identified with the arrow, I'm looking for a momentum shift and I got the triangles up, right? After the green bars, it's probably good enough combined with all that information combined is probably good enough to at least try a scalp. Okay, so no setup there. See how we got the arrow? But across from it, there's no yellow dot and there's no triangle down, right? So they're trying to shift momentum lower and it's just not working. And that's usually bullish, right? This one. And see how this gets immediately ripped? Because they've been trying to sell it and not succeeding. Now this might set up. Nope. We got a retest of it. That's probably the end. Yeah. And that's tough. It just didn't set up in this time frame. Okay. See how this dot does not produce a triangle after the arrow? If it's bullish, and you get the reversal here, that's usually a pretty good sign it's going to go higher. See that? Okay, so I think so that's that setup. It's pretty straightforward. It's just a little different than I used to do it. Here's the second setup, and this again is actually using one of Simon's signals, and that is the plus bars. The plus bars typically show up on the same bars as a triangle. It's a sign that you have some continuation following some compression is the best way I can describe it. I personally don't have permission or even access to the code to know how to build that signal. But when I watch what happens, that's what I see. I see the signal show up when there was some compression followed by continuation higher. That's where I see it show up. Now, there's also a bearish version, and it's purple, and it looks like, whoops, it looks like this. This one's got a green line behind it, so it's kind of hard to see. Let me find another one. Where's another purple one? Right there. That one's got a gray line by it too, so that's all. And then here's another one. Right, so and you can see that those will show up generally on bars with red triangles. Hi, Ronan. Ronan says hello. So those are the ones we're going to be looking at. Now, the way to play those on the 24 tick is generally it's a sign that a trap back in on the bar, the apex before it is advantageous. So for instance, if I thought that this was a good resistance for one reason or another, sorry about the cat, he's very jealous. If I saw this plus sign and I thought that this was resistance, I'd put a line up at that little flag, the little apex, and I'd wait to see if we can trade higher and then immediately sell. So that, I wouldn't do anything here, right there. That would be the sell point. That's the traditional way that Simon teaches how to use those plus bars. And it works fine, right? It works really well on the higher time frames. It works okay on the 15 tick. You just have to know, you have to have your locations figured out. You have to have a reason for selling that location. You can't just do every single one of them, because they do show up a lot. On the plus side, on the bullish side, the old way. Of course, now I'm only seeing bear ones. I'm looking for bull ones. They'd be baby blue plus signs on a bar with a white triangle, most likely. Okay, this one. This is not bullish, but if we got a trap back in above that, that would be an example. This one, it's not bullish, but technically if we got a trap back into that, that would be worth trying. Let me just go to the right, bar by bar, see if we can find another one. This will work better when you know the location. Plus sign, arrow, trap back in. That would be the best opportunity to try a long, right? It doesn't work in this situation, but that was the best opportunity yet to get a long for a trap back in. That was the spot to do it. Now see how that becomes resistance, because it was a good spot. It just didn't work, right? And on the, like I said, if it sets up on the 24 tick, it's the consistency is higher. On the 15 tick, it's like so this way. Okay, here's one. So there's your trap back in, and that one also fails. See? And I'm not showing you this to say it doesn't work. That's not what I'm doing. I'm just demonstrating that on different time frames, based on your price action, it's going to change your consistency. So here's a plus. Here's a apex. If it traps back under that apex and comes back, it's bullish. Well, look, it doesn't even get back there, right? And that's kind of frustrating. If it's like, okay, it set me up twice or three times, and it stopped out, and then when it finally goes, it doesn't even set up, right? So I looked into what's another way to trade this. And here's what I came up with. And it's kind of similar to the other one. All we're going to do, we're going to wait for a plus sign. Again, this is going to work way better if you know the direction on a higher time frame. But we're going to wait for a plus sign in one way or another, one direction or another. And then once we get it, we're going to look preferably for some sort of a pullback and then a dot followed by a triangle in the same direction as the plus sign. For instance, let's find a plus sign. Okay. Plus sign to the upside, right? What I want is a pullback, a blue dot, and I want it to immediately be followed by a white triangle. It's not. So this trap back in trade that stopped using the 24 tick method is not an entry on the 15 tick method because I didn't get the triangle up, right? So as of right now, no entries, nothing to do with just this setup, right? So let's go through the same little spot. Okay, here's a bearish one. I don't think I missed any. I'm not trying to skip them. Sometimes I do just miss them because I'm like looking too fast. But here's a plus sign here to the downside, right? And it does look pretty bearish. So what do I want? I want to pull back, followed by a yellow dot, and then right after that needs to be a red triangle. There's my pullback. There's my yellow dot. No red triangle. Nothing to do. The trade opportunity is over, and most likely I just have to wait. Right, unless it sets up a different way. And not surprisingly, it lifts because I didn't get the setup, so it wasn't valid, right? It wasn't a valid short, and it doesn't work. Okay, so there's another plus sign. Need to pull, and that's to the downside, right? So if I thought it was still bearish for some reason, it's starting to look like it's finding support, right? You're kind of trading into this messy area. Probably not going to work if it does set up. But what I would be looking for, if I thought it was a good place to short, would be a pullback followed by a yellow dot, and then immediately followed by a triangle down that's red. And I don't think I'm going to get it. See, that one did not have a dot. We did get the triangle. I would not be surprised if this one reverses. Okay, and that one just drops. We did not get set up here the right way, right? Okay, so wait. Okay, plus sign. To get bearish, I need a pullback, preferably, and then a yellow dot followed by a red triangle. No, I don't get it. So there's, again, it just hasn't set up yet. And that's normal. When you have something that requires an additional bar, compared to the other one, you're not going to get as many of them. And that's what I wanted. I wanted a filtering device, a way to trade when I get more noise, right? So wait. Again, there's other setups that I'm seeing, but we're just going to... Okay, sorry, I missed one. Here's a plus sign. Yellow dot, red triangle immediately following it, right? That is how it's supposed to set up. Note how the dot and or the triangle is interacting with the bar that has the plus sign, that is good. Okay? The stop can go here, or preferably it's behind the plus sign, but technically it can be behind the dot. Sometimes that'll end up meaning that you get stopped out for 5 ticks and then it drops again, but it's usually okay. The better stop is behind the plus sign here. Right, so entry, let's say 46.50, stop 61.50. It's still not even, it's more than 15 but less than 20 points generally. Okay, and you easily make your 1-to-1 because here it was, I think, 46.50, 34. Yeah, so 20 points, let's say. Okay, and once it sets up, it's done. That's it. It's just a scalp. Okay. Now note that the trap back in trade did work here. Right. So if it set up on the 24 tick in the same way, which it did, plus sign down, trap back in, drop. That that makes sense. Okay. So plus signs. Okay, plus sign. We would need a pullback, followed by a blue dot. And we don't get it. No plus signs, no plus signs, no plus signs. Oh, purple plus sign, yellow dot, we need a red triangle. No red triangle, right? Nothing to do. See how it gets choppy here? So that's great. Because I don't want to be participating during that. So that's why waiting for the dot and the triangle help. Okay, I don't see any more plus signs here, so I'm going to keep going. Oh, there's one. Up, right? So now I need a blue dot. Ah, no blue dot. This is probably going to lift. Just because this is another... So the diamond's inside, followed by some sort of a pullback, like that big wick. If you think if it's already bullish, that's usually... It's another setup, and particularly when it comes after a star in the opposite direction. So see how this star got like trapped down here? And then immediately you got diamond, triangle up. For a totally different reason, it's a pretty good buy. So I just kind of knew that it wasn't going to set up the way I was looking for. But it's a known setup. It's just not the one I'm talking about today. But yeah, and that just pays you all day. Okay, plus, yellow, triangle, short. Get out of the long, go short, right? Reverse there. And again, the stop, most conservatively, is behind this. So like 90, let's say like 94. The entry is, let's say, 80, 50, 80. Let's say 80. Best you could do, 68, right? So 20 points. I'm happy with that. And that's all I want, right? Especially if I see this, that's all I want. Now notice here, 1, 2 ranges below, I'm not selling that. Right? Even if it sets up again, I'm not selling this. I'm not selling this. It's too late to take the breakdown. It's too late. The setup was here, and the entry was either in this pullback or right when that level got re-breached again. Immediately when it closes on the next bar pullback, or right when it comes back through that low again, that's really the last chance because it printed 2 more bars in a row to the downside. So this pullback is very risky to sell. And in fact, I would have taken some profit down here for sure. And then held a runner for 20. And it's pretty bullish here, so really I don't expect to get past this line. I'm out of my trade probably right there. When it hits this line right there. See that? I'm out. Right there, right there. See how it bounces right off it? That's not random. Okay, plus sign. Plus sign, we need a pullback. Okay, so this blue dot is way too high, and it's not followed by a triangle anyway, so there's nothing to do here. This is too late. Even if I got a triangle here, I wouldn't do anything. Just doesn't set up. Probably not immediately going higher, right? Because otherwise we would have... It just kind of capitulated and let go. Okay, plus sign, dot, no triangle. probably just didn't set up. Didn't set up that way. Plus sign, blue dot, we don't get it. Plus sign, we need a yellow dot. Yellow dot, red triangle, that's a short. So most aggressive, short right when that bar closes. Otherwise, if you get the next bar to pull back, you could technically short this. You could technically short this, but your stop on the sell is right there. And that hits the stop, right? Now, here's a good example of one of these spots where sometimes you're going to get stopped out by a couple ticks, and then it's gonna continue lower, right? This is just sometimes it's going to happen, and I have to decide based on how bearish I am, basically, whether or not I'm willing to take this a second time in this exact scenario. Because see what the problem here is that you did get plus sign, yellow dot, red triangle. Like, that is a valid setup. But look what else you got. Blue, blue dot, white triangle, right? So the setup we talked about before triggered bullish on this pullback, right? Or like anywhere in this bar, right? So you could have gotten bull here with a stop down here. So do I really want to be shorting when I just got a bull set up to trigger? Probably not. Probably not. It doesn't mean it's not going to work. Like, it's possible that the bear setup stops and then the very next bull setup stops. That happens. But usually that's not what happens. Usually one direction works most of the time, and then sometimes it fails, right? So if you're looking at this and it's like, that's definitely bearish, then you ignore the bull and you take the when it traps back in here, you take the orange bar, short again, right? You take a stop and you expect to get your 20 points here. And you just stick with it, right? Because you thought it was bearish and you're just going to ignore the bull. And there's nothing wrong with that, right? It's just it's a read thing. And on the higher time frame, it might be a lot more obvious. Like, if I look at this, I'm like, oh, I'm not buying that, right? I'm going to have to break over something before I think it's bullish. We haven't even reached the trailing stop level. See that? The Kiwi stop hasn't even been touched. Like, it's not bullish. So my easy solution to that is just when you get stopped down on the short and it triggers back in on the very next bar, you just take it again, right? If nothing else, on this pullback, so you get it for real cheap. So like, even if I'm like mulling whether or not I want to sell or not, the higher it goes here, the more likely I should be, the more willing I should be to sell it again, because my stop goes here regardless of my entry, right? So here I'm getting in at like, let's say like 64, and my stop goes at 69. I mean, a 5-point stop on NQ, and then I get 25 points plus, depending on how long I hold it. Probably at least 20 points. On a 5-point stop, like, you got to take it, right? If you think it's bearish, you just got to trust that read. And even though you just got stopped out, it did trigger back in, right? You got that pullback opportunity to get short. I'll get short twice as much, I'll be honest. Like, if I took 2 here and got stopped for 20 or whatever it was, I think we'd looked at it. It was like 15 points, let's say. And then it triggers again and gives me a pullback to allow me to get in with a 5-point stop now. Yeah, I'm taking that with twice the size. And if it fails, I'm just done, right? Because it's just 10 more points. In reality, it's less than taking a full stop with a regular setup. So had I taken instead the first one and it stopped out, and I'm like, oh, maybe it's bullish, so then I see this setup and I take this bullish and then that stops out, like, I lose more, right, than if I just commit to saying, look, this looks bearish, nothing's really occurred on the higher time frame to suggest that that's changed, and I'm getting an opportunity to potentially get, 4, maybe 5 to 1, depending on how long I'm willing to hold it. There's no reason to not take at least somewhere near what you would normally risk on the bull trade. Like whatever your amount that you risk, like it's not sizing is just about risk management. So like if I normally risk $700 a trade or something, $800 a trade, like whatever my sizing needs to be so that when I get stopped here with that 5 point stop that I lose no more than $700, I can take it. So in this case, it's a big trade, right? And then when it works, like you're probably you can bank like most of that trade and then just say, hey, if I lose half of that winning, I'm done for the day, and you're guaranteed to be green then. That's how I would like to trade, right? But yeah, if you didn't recognize it was bearish, you might have gotten a little chopped up in here, and you can see all these bull opportunities. Blue, no triangle, right? That one did not set up, thankfully, but this one did. One thing I'm seeing, if the arrow, I forgot to mention, if the arrow trade, so I mentioned the thing about the triangles, right? If you get an arrow on a triangle, and that trade stops, so that's the entry, right? On this triangle, because it's blue dot triangle in the same range as this arrow dot. When that one stops, when that comes back and stops out, you know it's bearish. And really, anywhere in here, if there's a sign of aggression, it's probably shortable. So for instance, any trap back in. So find an apex, wait for it to trade behind it. As soon as it closes bearish, it's probably a short. Right? So once that's stopped, you know that you just need to, you don't just auto, I can't just auto short because I know it's bearish. I need to manage risk. And to do that, I need to wait for a setup. But it's pretty much any setup. So here is, I didn't see this one. It's a hidden plus right there because it's behind the star. So all I need here is yellow dot followed by a red triangle. And I can get short anywhere in this range. So that's a short, or that's a short, or that's a short. So hopefully that makes sense. And then you get a nice, then you're done for the day. Okay, here's that other trade I was talking about with the ring. See how on the higher time frame, I mean, this is really bearish, but if you had a level here, I'd say ring, and then triangle up. It's better if that's pink. And like I said, if I didn't have a level here, it's pretty dangerous. But I might think it's time to buy. And here you can see that they just kind of like grind it out. So instead, the better trade, in my opinion, is to wait until you get this established, and then see if you can hold it as support. Now here you might have taken this, but you had resistance right here, so it'd be horrible risk reward. In this case, just because of how it's set up. Because look, if you enter here with your stop here, what's your target? It's your next apex. That's right here. That's horrible risk reward. There's no reason to take that trade because this didn't go anywhere. But if this goes 40 points and then pulls back into that area and holds, like you've got a 3-to-1 opportunity there. Okay, so let's wait here. Plus sign. Okay, here, this one stopped. Plus sign. Yellow dot. Red triangle, short, stopped, right? Now, it's fine that it stops. It's normal. It's okay, right? It doesn't mean it's not a good setup. It doesn't mean you did anything wrong. But let's take a look at how I could have read this to maybe recognize that this wasn't a good time to keep shorting. Here's the number one thing I see. Look at the lows on these volume oscillators and how they are making higher lows. Oh, I can't seem to grab that one. This is making lower lows. That is volume divergence, and that momentum divergence, and that is usually not a good time to short. It's not always a good buy, but it's usually not a good time to short, particularly if you've got a blue background. And yeah, I won't go into everything, but that's more. This is like the worst. If you see this blue background after that divergence, see here you haven't had the divergence yet, right? But if this blue background is here, you go look out. Don't be short. You still need a setup to get long, but don't be short. And then the other thing is we're just so deep in the channel. If you look, you want your shorts to set up here at the top of the channel. This is getting you short below the bottom of the channel. and you're below the last low and you're not taking a breakdown. That is the epitome of shorting in the hole. You don't have expectancy, right? It's no different than buying, where was that? Buying this when you have a resistance right here, right? It's the same exact thing. It's just that it's a hidden resistance because all it is just, it's just no room to go anywhere. So yeah, it might not look like a resistance down here, so you might not see it, but the idea is because you're nowhere near, it's like, we all think that when we see price dropping that it's just going to go to zero. That's not how it works, right? You need to get some mean reversion. Now this is a good place to short, right? It's not bullish because it did this. This doesn't make it bullish. Even with the bullish diversions, it doesn't mean that the trend is done. It just means it needs rest. It's not a great time to short. This is a much better time to short. Okay, I'll do like 2 more and then I should get some sleep. Okay, plus sign, dot, triangle down. Now again, you're trading below the previous low. You're trading below the bottom of the channel. Is it a good place to short? It depends. Like, did you have a level that you recently broke? Are you seeing volume come in? Now here you did not have volume divergence. As long as you have a target somewhere lower, it's not wrong. But realize that the lower you get in here, the bigger the rip can be and the stupider you'll feel when you sell low. So they start to, and see how the range on these pullbacks is increasing? That's normal. So rather than taking this trade as like, because there's nothing breaking down here on the triangle, because your entry's here. So, I mean, it does produce, it's not that it's wrong. Again, it does produce, if you got in at, let's say, 75, this went to 68, it's not enough. It would have been a stop for me. Okay, plus sign, no yellow dot. Plus sign, yellow dot, no triangle down. It's not setting up anymore. And with the bears, that's usually a sign it's done. When the bears stop producing momentum and they start to break highs like this and make it supernova, it's probably time to stop shorting. Right? See the difference between this and this? Where here, it remained, we tested resistance, but we don't go anywhere with it, right? Here, for the first time, we get over resistance and start making higher lows and then higher highs. Now this one's a little tricky because it's pink. So if the low gets broken and they don't trap back in, it's going way lower, but usually trap back in down here are really good. Like everybody knows there's a buyer waiting down here. It's just a matter of who can like manage risk appropriately to be able to get and not be so greedy to like buy the top. So if you get a pullback back into here, it's usually a pretty good place to buy. Like, let's see if it sets up. So plus sign, dot, triangle down. This says short, and I wouldn't do it. Right? That's really dangerous. Because if you look to the left, this double bottom is like 5 points away, right? You're trading right into support. And we've already made higher highs and higher lows, right? And we're now, for the first time, coming back and testing that last lower low. It doesn't mean it's bullish, but shit, if this reverses, it's done going down, right? Because it already gave a sign of some strength. And so this low needs to be obliterated if it's still bearish. And what do you know? They come just a little bit lower. They don't put any volume down here. And then all the volume comes right back when they get back to this level. See that? See how the line, that yellow line where all the volume is? It's like right here. Right when they test it below it, everyone's like, yes, buy it, right? They try one more time. If I had to guess, we're done. Okay, we get blue arrow. So pull back into that area with the blue dot, triangle up. And here's a plus sign. So once again, blue dot, triangle up. We just need to pull back, blue dot, triangle up. They might not give it to us. Yeah, everyone's like sniffed that out, and they didn't give us a pullback. There, that's a little. This is too far away, right? I wanted it right here. We did not get the triangle. I needed this to pull back, and then give me blue dot, triangle up. It just didn't set up. Plus sign, blue dot, triangle up. Bullish, right? Buy, buy, bye-bye. Right? So, yeah, if you get too frustrated about missing this move, you're gonna miss this, right? But if you just stay calm and recognize, hey, I thought this was the low. This looks pretty good. I thought this looked like it was gonna get bought. I didn't want to take too much risk. Now they've gotten over. See these backgrounds that are brown? These are divergence bars. Once we get the yellow line back above them, if they hold as support, it's not going lower. So look, we have 1, 2, 3, right? There's actually another one over here too. This is the first one that got beat, but here, I'll do this one first. For a freebie I'll throw in for anyone who watched it this far. So look, all these backgrounds, right? It's just delta divergence, and everyone probably knows how to do that. So it's not delta divergence on this time frame, but it's delta divergence. I'll give you that one. If you look on the footprint, you'll see it. So if I can hold that as support, it's bullish. Well, if you can't, it's resistance. Resistance, resistance, right? Okay. This one, same range. Also divergent. Pretty important, I imagine. This one, divergent. If I can hold that as support or resistance, it's probably going to go in that direction, right? We get under it, we get over it, we get under it, we get over it. It's not holding in either direction, right? It's what we say. It's not confirmed yet. They did get. If you look at the yellow line, they got volume below it, and then they rejected lower. So that looked pretty bullish. And then here you can see they touched it and then closed bullish. So that would be a reason to scalp back to resistance. But then you can see that they give it up again. But they put in 2 more, right? So let's shift these over. Now that we're just going to make this one big area because they're one right after another. This whole area is either resistance or support. We go lower, but look at yellow line. It doesn't get under it. It finally gets under it, but it's a purple bar, right? Meaning it only got down that far because people pulled their orders off the limit order book. It goes a little lower, and it closes bullish. Goes a little lower. Look how the volume on the bearish bar is still inside the range of where we had divergence, right? It's not that bearish. It should be expected. They're just defending it. And we had more divergence. This whole area now, since they're all next to each other, is either going to be support or resistance. See how it's growing? So once we can exit this area, we're going to have a really big move. Okay, we get a purple bar below it, but we can't get the VPOC below it on a bearish bar that's not purple. They immediately lift. They get over it. They get over this one. They get over this one. Now, one of them should probably, since we got the yellow line above it on a bar that's not bearish, and it's not pink, this, all those bars are signaling bullish. We just need a pullback that holds. And the easy way to know if you have a pullback that holds is watch for a pullback and then wait for a white triangle up. Pullback, white triangle up. So this, right here, it's holding this range as support. If you wanted to wait for the small one, you take that one. If you want to wait for this one to get broken because it might act as resistance, that's also acceptable. It's this one, right? Breaks over this old resistance on a bullish bar. Now it's done. See how that worked? Now look, this is bullish divergence. So the exact inverse. So this one, the next one. So this is the range of these two. And then this one's also in that range, right? If that area if we leave it and then it becomes support, we're probably leaving the whole area. Right? Now look, they put another divergent bar, bearish divergence. We're not going to worry too much about the direction of the divergence. Let's just think about it as location. This area, if we leave it and it acts as support or resistance, like right there, sorry, this one, the triangle off of it, right? Again, the orange bar is the one that like checks off of it. But if you got the triangle to follow, that's continuation momentum. So this is the confirmation. And what do you know? We had plus, orange bar, triangle down. The secondary entry setup that I was talking about earlier. It works with the plus signs too, in addition to the arrows. We also had arrow, orange bar, triangle down. They all lined up with the divergence. They try to act as resistance again, but you can see that we had a bullish divergence here. And that acted as support. The triangle up didn't come till here. We got more divergence. See that? Triangle up, coming out of it, gives us a lift. It holds here, triangle up. They try to break over it. See how they try to get under it and they fail? That triangle up's probably good. Now here we have divergence all the way down to here. It's a really big range. You have to put stop below that. But it does work. Note that here we really don't have any more negative divergence. There's no reason to think that this low is going to get like obliterated. It can hold again and again and again. Technically. See that? Test below it, closes bullish, up it goes. Now this one's the divergence. Spread it out a little more. We get a triangle up above that. It's still going to go higher. We get another one. Here to here. Triangles out of that area are probably going to lift higher. See that? I'm telling you, you can go on and on and on with this. Here's another one. Now, eventually, will it stop? Yeah, it'll stop eventually. Come down, set up, triangle up, probably lifts. If it comes back to it and gives another triangle up, it'll probably lift again. All right, oh, we got more here. One here. One here. Now, if that's resistance and we get triangle down, it's probably going lower. See that? Triangle down is a good one for a sell. Back to this one. Triangle up. Probably gets back to resistance. And we get another one. Bullish. We get this one bullish. We need to leave that area and get a triangle up. Right there. See it? Tried to test below it. Only got a purple bar below it. Came back up. Put volume inside. Close lower. Volume couldn't get any lower. We close higher and we get triangle up, lift. And I mean, I don't know what to tell you. It's literally it. Now let's see with the current. I know it kind of seems like voodoo, but it really does work. Primarily during the regular trading hours, but even after hours. So let's just look at like this is Friday at the close, right? And we get a lot of divergence when there's a lot of volume. So look, this whole area is like either support or resistance. This one is support or resistance. That's also divergent. This one is also support or resistance because that's also divergent. Look at how big that area is, right? Which means that we could chop around in that whole zone back and forth before really knowing direction. But unless we can put volume below that, it's not bearish, right? So when we test down here, but volume holds and it bounces, it's not bearish yet, right? Note, though, we got bearish divergence here, right? Bearish divergence here. So the expectation should be if we come back in here and hold it and then give triangle down, it's probably bearish. Well, that doesn't happen. They test below it, and they rip higher back into the other zone. Right? So let's just get rid of this one so it's not confusing. So the bearish one failed to produce a retest after it broke down. It broke down, and I know it broke down in a triangle, and that's a little confusing. But unless it's really bearish, you don't want to take the first one. You want to wait for it to act as resistance and then get the triangle. But instead, so let's say you did take the short because you were being aggressive. If I did that, that's okay. You get stopped out. Now I know to look for the bullish one. They can't get the VPOC line below it, and you get bull triangle up. We're probably going to the top of it. To the top of it. Now we need to retest it and hold. Oops. And then we need to get out of it with the triangle up right there. See how we came out of it, retested, left it with triangle up? That's bullish. And again, could it establish inside of here a couple times? Absolutely. But I do not want to be a seller when it's doing this. Now, we did have another one right here. See that? There was a bearish one right here. Right? What happened? VPOC line got below it. It was a purple bar. When it goes lower, it closes bullish, and they scream back through it. Is that bearish? No, not at all. So, in my opinion, there's no reason to sell this at this moment. And so like, even though I got a purple square right there, or a plus, I mean, I don't want to be looking for yellow dots, but I did get a blue plus. And so if I got a blue dot followed by triangle up, that'd be a buy. And then I got a blue arrow, right? So that area, if I got a green bar, or since I think it's bullish, I got more evidence to think it's bullish because of the divergence. So if this would have been green and then triangle up, that'd be another reason to get high, get long. Or if I get a blue dot followed by a triangle up, that'd be another reason to get long. So that is what I'm looking at for these little scalps. And in general, another just a little note in case I forget, if the triangle for these triangle entries, when the triangles are small and pink, or big and pink, but preferably small or pink, they can be really small rectangles without a wick, and then pink like this is perfect. This is good, right? This is still okay because it's pink, even though it's got a long wick, right? But let me find this one's good, right? If that is an entry and it's small like that and or pink, my chances of continuation are higher. Yeah. So that's it. Like I said, if you want to get more info on the algo, talk to my coach Simon, trade_perform@gmail.com. You can see what we're doing in the trading room, get a 5-day free pass if you mention that you heard about the room through me. And then if you want to get a hold of me on Twitter, @RedBandTrader. Thanks for watching, guys, and I will see you all soon. Have a good trading week until I